Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Not The video for the 11th of October here in 2022. What you're seeing is a new low. That is on a very volatile trading session. The NASDAQ once again was the leadership to the downside, or showing relative weakness, and that keeps in the picture of rising rates in general. Although it hurts the broader economy, does tend to focus more downside or bearish pressure on technology companies. And that would include names in the NASDAQ, also XLK, which is the broader technology ETF, and of course the broader ETF, which is the Qs. QQQ is a NASDAQ related ETF. Now that is the big picture as we continue making lower lows. And in tonight's video, we're going to focus on two main things. One, which stocks continue to lead the market lower. And we've had that discussion with new 52-week lows and the big market cap names leading us there, and the indices tend to follow them. But there are stocks that are even weaker and much weaker than you're seeing the performance of the broader equity markets and the ETFs. And the second part is going to be where we'll start. We'll start our conversation right here with the Market Watch and the calendar. What's important this week? As we're setting up and going forward, two things are going to be of grand importance, two main things at least, one of which is the FOMC minutes. Now they are not going to be new policy. There will not be a rate hike tomorrow, but we will get to learn a little bit right in here about what the Federal Reserve has noted or spoke or said, or the different things that we might get any insight about Fed voting members. And that was some of the main volatility moves in today's market. One of the headlines among many was that the Fed is going to have to keep raising their rates to cut back on inflation. The argument being inflation is not yet contained. And if inflation is not yet contained, the Federal Reserve will have to keep raising rates. And just a quick note, if the Federal Reserve continues to raise rates, they don't control the 10-year Treasury note, but rates probably continue rising. And if rates continue rising, and if inflation continues to be a big picture and it's not under control, that's not a good thing for the broader equity market and the like. So that's the first thing we'll start with. The other thing is going to be the CPI. The CPI is the Consumer Price Index. We'll take a look at what this is. This is right here in our Market Watch tab. And of course, the CPI data, Consumer Price Index. We're looking at this actually over here in the grand scheme of things. Not China. There's a few CPIs coming out, so we'll watch this broader. But in our world here in the US, in our equity markets, it's going to be this. There's a few other, lots of news reports, but focusing on the CPI, and that could be a big game changer. The previous was 8.3% on the report. Might it come in a little bit lower than that on an annualized basis? Maybe. That would be a good thing. Might it come in hotter or higher than 8.3%? Not going to be a good sign, and that could be a catalyst for much lower equity prices on Thursday and perhaps beyond. And of course, we'll take a look broader at anything else, or more narrow focus, I should say, on where inflation might be coming from, food and energy, without food and energy, and of course the trends and the comments that might be in play. So that will come out. Other CPI reports, other PPI reports will come in. That's a producer price index, and we have that across the board. So we're going to be watching the US, the consumer confidence, and the information that comes out from the board. Now, what is the market saying about this? Let's look quickly at the SPX. We'll just take a look quickly at some implied volatility. So on the SPX, a few things to note. Number one, that's today. Today is over. But tomorrow, that's going to be Wednesday. So on Wednesday, what is the market suggesting about the implied volatility? 34% for the SPX. A little bit larger than normal, but maybe not the key to watch, because Thursday, that's going to be 45% implied volatility for the SPX. That's going to translate into an expected move, at least currently, of about 100 S&P points. How about the other markets? In the NASDAQ Wednesdays, remember the Fed is going to release the minutes. Not really a big mover, but nonetheless could be a mover if there is a surprise. And they'll be talking about inflation. They'll be talking about the trend of interest rates and the state of the economy, jobs, and the like. We'll again know what they said at the prior meeting. But the big mover, at least in terms of implied volatility, once again, is Thursday. Thursday will be that inflation data. Hotter than expected. Hotter means higher. Hotter than expected. The Fed will continue their campaign of raising rates. And that would be bearish for equities. Keep these broader themes in mind as we discuss some other plays. So inflation continues to be the driver. Inflation and the Fed. And it's a two-way, I want to say street, a two-way concept. If inflation, which in and of itself is not good for the economy, not good for consumers, not good for businesses in a general sense, so that's one. If the inflation keeps going higher, the Fed will keep raising rates. That is a double whammy to the equity market and to the economy and multiple stocks throughout each of the sectors. Again, technology being one of the leading edges of the sell side activity. Now, what does this translate as beyond the equity market? To me, it's the simple play is if you can do so, small exchange or other products that would allow you to go long or hedge yield increases or rises in the treasury yield. And we've had that 2%. 20 just means 2% on the TNX, the 10-year treasury note yield. 30 means 3%. We are at 40, which means 4%. And the TYX, that is going to be the 30-year bond yield, not that much different. Also cresting up to the 40, and again, just by the index here in Thinkorswim, 40 is just 4%, 30 is 3%, and on down. So an interest rate rise and continuation of the upside has made new highs. Behind that is the bond market price. So TLT, or perhaps, and that's a tradable fund that I trade, IEF, not one that I trade personally, but still the same logic. And of course, the futures market and the bond products, if you trade futures or trade hedges or spreads or other option positions, these are still in play. The ZN is a 10-year treasury note. ZB is a 30-year bond, both of which are off to new lows. If the Fed keeps raising rates, there will be no reason to assume this will change. No reason to assume the inflation has peaked, the rates or the yields have peaked, or the bond market has bottomed. Again, this week will give us a lot more information about where inflation is and what the Fed has to say about that, so it very well could be a volatile week. But right behind that is the dollar index, which continues to make new highs. Each of these are trades. If the trend is up, if inflation is a big concern, and it is, and if the yields continue to rise relative to other currencies, that the dollar index will continue moving higher. All of these are trades. And trades could just be a swing. You could have a duration position to hold a little bit longer, whereas I prefer to scalp or to play short-term positions in the direction of a trend, and those are done on pullbacks or flags or buying into support and typically exiting the position with spreads or shares. And if you do trade the ETF, that might be related to the UUP, is getting up to its upside target as well. Which stocks in today's session? Remember, the stock market itself, the S&P, will look at a few different ETFs, the SPY, the spiders, the SPX, which is the broader index, and the S&P futures. They all made new lows in today's session. But which stocks led the market lower? And this is a consistent message that I continue to reinforce with the evening videos, because these stocks that are making new lows have better odds to keep making new lows. So just a few of them toward the end of the video in a volatile week. They would include, we'll put the hourly chart here and the daily chart here. Same logic. If it is downtrending, it does have short positions or bear positions or sell short, put spreads and the like, not at new lows, but on retracements. And the logic is if it is weak, it tends to get weaker. Microsoft is leading the large market cap stocks to those lows. And I sort this 52-week low list by market cap in the SP 500. Behind that is Facebook. I still can't call that Meta. It's Facebook. It is leading off to new lows as well. One interesting point about Meta is that it is under the COVID or the crash lows of 2020. Microsoft is, for lack of a better word, not there yet and not even close. But JP Morgan is getting nearer its lows. That's a financial company. Behind it is NVIDIA, which is part of a chip manufacturing and semiconductor type stock or semiconductor type industry, and it's pushing off new lows as well, not far from its reference lows in the 2020. Another financial company, Bank of America, is off to lows along with Broadcom and Cisco. We'll also take a look at Verizon, Salesforce.com, Comcast, Qualcomm. We'll also take a look at AT&T, and then Intel. All these stocks are sliding off to new lows. Remember, the market's nowhere near these lows. But if the market keeps going down, and if these stocks keep making those lows, that would pull the index down. These are stock leaders to the downside. And in an environment where we continue to see additional inflation and the Fed continuing to raise rates at a fast clip, it will not spell good news for equity prices as they potentially continue sliding lower. But we will know more on Wednesday what the Fed thinks, what they say in their minutes that came out at the last meeting, and inflationary data on Thursday. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for October 11th, 2022.